Hey traders, back again with me, Forex James. Hope everyone is doing well. It's my first video in 2019, so I'd like to wish you a happy new year. It's currently in the middle of January, so I hope it's not too late to say it to you guys. Anyways, today's topic is on how to know when prices will break out instead of making a false breakout or fake out. If you think about it, the market has only two phases. One is a trend phase and one is a range phase. And when the range period occurs after a trending period, eventually it will break out to one side or the other. There are only two directions, guys, okay? So knowing where it is likely to break out will definitely give us that extra edge and will make us become better Forex traders. Okay, I'm responding to a question posted by Miras GR. His question is, how do you avoid fake outs? When do you know the price broke for real this time? Okay, let's get down deeper into this topic. Ultimately, everything comes down to supply and demand. Okay, so when you see prices going up in an uptrend, it means there are more demand than supply. And it's true when it's a downtrend. There is more supply than demand. Okay, when demand equals supply, thus the range forms. Okay. Oops, pardon my tilted line here. As you can see here, price is trapped in the range when there is an equal volume of buyers and sellers. Okay, and when it finally chooses to break to one side, then demand is greater than supply, or buyers more than sellers. Simply put, okay, if you don't like the terminology of demand and supply, let's just call them buyers and sellers. Simple. And it's only fair that we talk about what happens during a fake out. Okay? Similar to the range play here, this is usually a trap set by the big boys to induce the sellers to jump into the game, while their whole intention is to buy from these sellers. Okay? Because remember, if you're buying, you need someone to sell it to you. So here comes the novice retail traders jumping in on this sell breakout, and prices quickly return into the range not long after that before breaking to the upside. This is a very common situation where you'll see price faking out to one side before breaking out to the opposite side. If you've been trading long enough, then you must be very familiar with this kind of setup. Okay, so I'm about to give you a few tips here, guys, on how to know where prices will break out to. Number one, it's gonna be, okay, what do I mean by that? So a fresh level just means that it's a level that's being tested for the first time, while a thin level is a level that's been tested way too many times and it's thinning out. That increases the chance of it breaking out. Okay, I covered this on the 4-part price action trading series, and in part 4 of the series, we come down to asking ourselves if the level is basically going to break or hold. If it's going to break, we may take the breakout. If it's going to hold and bounce, then we'll take the opposite side. Simple as that. So let's take a look at this pair here. Okay, this is a great example here, okay? See, move to the downside. It's trending to the downside, and it's come down to a consolidation phase, a ranging phase. Came up for the first time, the bears jump in, the bulls jump back in, pushing prices up further. So over here, when we zoom in into a into the H1, because this is the H4, you would probably be able to see a drop, base drop, a supply zone here, which is tested for the first time. And that means that there is lots of supply up here that hasn't been consumed. And on the other hand, the demand levels here, okay, buyers came back in here, another time here, another time here, and one last time right over here. Okay, so the more times that this bottom level has been tested indicates that the demand level is thinning out. Okay, and the fresh supply is coming out from the bears right here, and therefore it only makes sense that prices break to the downside. Okay, and the second tip I'd like to give you guys is to look for the fake out prior to the breakout. Okay, and usually the fake out happens in the opposite side of the breakout. Let's look at the charts. This is another classic setup here. It's so perfect and textbook style. Falls into a range. Bulls and bears are fighting it out. Buyers equal sellers. And then bam. People are thinking, oh, it's flying. It's going to the upside. I'm going to jump in. Only to know that it breaks to the bottom side. Okay, and in this case, it's not a big continuation of the downtrend, but the sellers who were on this round to the downside were able to make more than enough money from the buyers who were trapped here. Okay. The other thing why this also works is because imagine yourself being a buyer right over here. Okay. Where would you put your stop loss? Beneath the range. Right? Because that's what we're taught and that's what most people would do. So the stop losses would be triggered as well in this case, adding to the amount of sell orders, okay, which drove price lower. So that's tip number 2, look for the fake out. Tip number 3 is to look at the upper time frame. Okay, more often than not, prices would break out to the direction of the bigger trend from the upper time frame, which controls the movement in the lower time frame. Okay, here's an example of it. Prices moving to the downside here, making lower highs and lower lows, so it's a downtrend, falls into a range. Fake out again before breaking to the downside. Okay, this is how it looks like on the bigger picture if we zoom out. Okay guys, so those are the 3 tips I would like to share with you. And enough of these examples. Let's have some fun right now and play a little game here. Okay, I want you guys to guess where prices will likely break out to. Okay, the next few pictures, I will post some before and after pictures, and I want you to guess where it will likely break out to. Okay, there will be 5 scenarios altogether, and I'd be curious, out of the 5 scenarios, how many you got right. Okay, let's get started. Okay, so I want you guys to pull out a piece of paper, write A and B, left and right. Okay, and we'll start with picture number 1. Okay, here's picture number 1. It's 1A. Okay, write down where you think it will break out to. For example, to the downside. Okay, I'm gonna let you have a look at this picture again. It is the same picture, except I've zoomed out. Okay, so write down again where you think it'll break out this time. Is it gonna be the same as A, or is it gonna be different this time? All right, that's 1A and 1B. Okay, and this is 1C. This is the answer of where price broke out to. All right. If you get it right, just put a check mark. Okay, the second scenario 2A, pound dollar on the H1. Where do you think it will break out to? Then I'm going to show you the bigger picture right here. Okay, you good? Let's see if you got it right this time. There you go. To the downside is the right answer. On to the third scenario here. Pound dollar as well. And let's take a look at the bigger picture. Okay, this will give you more clue as opposed to just looking at the smaller picture. Ready? To the upside is the correct answer. Okay, and fourth scenario here. Euro Yen H1. Okay, pick your side. This is how it looks like on the bigger picture. See these fake outs? Downtrend? Okay, broke to the upside this time. Okay, last of all, Euro Yen H4. We'll zoom out as usual. And let's see where it breaks out to. Okay? To the downside. This was live as I was making this video. So I wouldn't know if it continued the downtrend or actually it went back into the range. Okay guys, so thank you for listening and tuning in and participating in the quizzes. Don't forget to write down your answers in the comment section below. And just to recap everything I've covered, the 3 tips that I'd like to share with you are: number 1, fresh level versus thin level. Prices are more likely to break out on the thin level side. Number 2, spotting the fake out before the breakout. The breakout usually happens on the opposite side after the fake out. And last of all, number 3 is to have a better look on the bigger picture or the higher time frames. So thank you once more for listening. I'd appreciate it if you give me a thumbs up on this video and subscribe to my channel. Best of luck in your trading, guys.